In Jamaica, we describe as bad-mindedness the tendency to tear down and badmouth those businesses and individuals who do well. However, those of us who do well provide inspiration to others and indeed help Jamaica's overall profile. This clip from NCB Group's Managing Director Patrick Hilton at the bank's annual general meeting spoke eloquently to the issue.
There is an issue I want to spend just a few minutes talking about, and so I crave your indulgence. It is about a tendency among some of us to unfairly criticize, or even in some instances, to seek to vilify individuals or organizations that do well. The truth is that I have no difficulty with constructive criticism. In fact, my colleagues will tell you that it is something that we actively encourage. We welcome it, we appreciate it, because as we often say, it is free consultancy, and it gives us the opportunity to improve on who we are, to improve on how we deliver our services, and to improve on our performance. Strong performance, however, my friends, must not be frowned upon. It is high performance and productivity that propels nations that are today growing the fastest. With growth comes additional opportunities. It is a fact, and we all know this, we have heard the saying, that a rising tide lifts all boats. Strong financial performance is important to sustain the returns we provide to our shareholders, for the security we provide for our depositors, for the employment and development of our employees, and ultimately for the good of our society. If more of us can do well while doing good, Jamaica will be a better place for all of us.
So let's encourage and provide mentorship so more Jamaicans can legitimately experience the Jamaican dream. Even in the aftermath of the two debt exchanges, both NCB and its rival Scotia Group continued to lead the financial sector's recovery. NCB had a good first quarter with a net profit of almost $3 billion, and Scotia Group saw 2013 profits growing by over 11% to almost $12 billion. Jamaica's painful structural adjustment program has started to yield fruit, as chairman of Scotia Investments Bruce Boyne observed at the company's annual general meeting on Friday, February 28. Jamaica has successfully completed a series of structural reforms agreed with the IMF. So how does Boyne view the early progress?
The country's report card so far has been encouraging, as both the quantitative and structural targets under the program have been achieved during the first 3 fiscal quarters. In fact, Jamaica is now on track to deliver a fiscal deficit of about 0.5% of GDP, which is the first time in 18 years that such a low fiscal deficit has been achieved. In addition, there are tentative signs that growth is slowly returning to the economy, with the fourth quarter projected to have expanded by 1.4% after many quarters of flat to negative growth. Personally, I see it when I travel back to Jamaica. I'm sure everyone's aware that I moved in September, and I just see a little bit more optimism, or if not more optimism, less pessimism, and certainly a good sign that the economy is starting to move into the right place.
Scotia Investments itself had a challenging first quarter ended January 31, 2014, a quarter which saw net profit plunging 26% to $421 million, a direct consequence of the debt exchanges. The CEO of Scotia Investment, Lysant Mitchell, is, however, hopeful that Jamaica will see benefits from the reforms agreed with the IMF. Mitchell is optimistic about the company's strategy of growing its off-balance sheet business, which he viewed as a success story so far.
All 4 business pillars continued to support and contribute to our off-balance sheet focus. Our asset management business, our trading business, our capital markets business, and our retail brokerage distribution business. I want to at this point highlight some of the successes there. In terms of our fund management business, Scotia Asset Management contributed to the strong performance and did fairly well. During the year, Sam J contributed $315 million to total revenues, up 9% from the prior year. The assets under management grew by $9 billion to somewhere in the region of about $85 billion. In relation to the total collective investment scheme in the industry, your company's market share is some 48%, inclusive of the unit trust and the mutual fund market. The Scotia Premium Fixed Income Fund continues to be the largest fund in the market and had assets under management at the end of the year of $15.3 billion. The trust clients have placed in your company, the product suite, has resulted in 2 critical milestones during the year. First, since the successful launch of what we can truly say is the true money market fund in the market, the Scotia Premium Money Market Fund, we are very excited to report that it has grown to $5.1 billion at the end of the year.
The big 2 financial companies are expressing cautious optimism on Jamaica's new economic model, which is apparently making some progress in fixing the structural problems that have dogged the island throughout its modern history. That's your wealth for this week. I'm Owen James.